Fintech Chatter, brought to you by Tier 1 People, leaders in Fintech executive search. Hello and welcome to Fintech Chatter, the show where I connect with fintech leaders for a bit of a chat. Today I'm joined by a special guest, Macgregor Duncan of Constantinople. Constantinople is a first of its kind, an all-in-one software and operational platform for banks. It provides a fully managed platform service covering customer experience, product, infrastructure, operations, servicing, and compliance. Macgregor founded Constantinople with co-founder Dianne Challenor in 2022, and this week they officially announced their launch along with a record-breaking 32 million seed raise with SquarePeg, Airtree, and Great Southern Bank. I chat to Macgregor about the huge problem they're tackling at Constantinople, how they've managed to raise such a significant amount at such a tough time, and his personal journey from global banking exec to fintech founder. But before we speak to Macgregor, if you're listening for the first time, make sure to follow us and give us a review on your podcast player of choice. And if you're coming back, thanks so much for your support. Macgregor, welcome to the show.
Thanks for having me, Dexter.
As I mentioned, massive occasion this week. You finally came out of the woodwork. This feels like it's a podcast that's been a year in the making, and with a massive announcement of a 32 million seed round backed by SquarePeg, Airtree, and Great Southern Bank. I mean, what an announcement at a time where it's been a really tough going for the fintech industry here in Oz.
Yeah, it's been a big week for us. Obviously, as I think you know, we raised capital about 12 months ago now. So in May 2022. And over the past year, we've been really focused on bringing the platform to market. And so we were really conscious at the time that we raised capital that we didn't want to announce what we saw as fundamentally an input. We see capital as an input in allowing us to actually build something. And we wanted to wait until we'd actually done something with the capital, until we'd built a team, until we'd built a platform, signed our first client bank. And now that we're in production, we've got a working banking platform, and we thought the time was right to come to market and announce what we've done to date.
Awesome. So we're going to talk about a few things, obviously talk a bit more about Constantinople and the big problem that you're solving. Seems very opportune, given what's happening in the banking industry at present as well. But we're also going to talk about your journey going from last time you were on the show, which was 2 years ago, actually this week, I believe. You were an executive at Westpac, and now you're a co-founder at a startup. So we're going to talk a little bit about that journey as well and some of the learnings that you've had along the way. But tell us a bit more about Constantinople and the big problem that you're solving.
So Constantinople is a complete software and operational platform for banks. And we're really deliberate in how we describe the business. But we think of it's the first of its kind in the world in that it is a complete infrastructure platform, but it's also a complete operational platform for banks. And so maybe we'll unpack that a little bit. So the infrastructure layer of our platform ranges from front-end customer experience. So we run mobile apps and web apps. It's through to the infrastructure that's needed to support banking products like transaction accounts, payments, cards, and lending products, right down through to the underlying ledger and the data lakes that we need to support a bank from a traditional technology perspective. We manage that on behalf of our client banks. And there have been other companies historically and today who package all of those infrastructure components up for a bank as a fully managed service. I think what really differentiates us, though, is that we're looking to expand the remit of the software to discharge and provide a lot of the operational services that a bank needs in market. So we also perform all of a bank's onboarding, KYC, AML responsibilities as an agent of our banks. We manage their fraud program. We manage payment operations, lending operations. We manage customer servicing and call centers. We manage all of the compliance obligations and the risk settings on behalf of our client banks. And we use software to do most of that. And so really what our business is in total is a complete operating or operational platform for banks, which allows our client banks to then focus on the things that really matter to their customers and the business of being a bank. And we sometimes say, when you think about a lot of what a bank does today, a lot of those services are either commoditized or completely undifferentiated from a customer's perspective. And so, no customer says, I've just switched to Bank A because I love the way my money sits in that transaction account. And people don't say, I switched to Bank B because I love the way they submit their reg files to the regulator. Now, these are mission critical services. You've got to get them right. You're operating inside the regulatory perimeter and there's no room for error. But these are undifferentiated services. No customer is choosing who to bank with based on those services. And so we saw an opportunity to package up all of the infrastructure and the operational services, do it using software for a fraction of the cost, improve compliance outcomes because we're now using software and automated controls rather than manual processes, and thereby really allow our client banks to focus on the things that they want to do and the things that they're best at: customer relationships, brand development, management of the balance sheet, liquidity, risk appetite, pricing. And so for Constantinople, we're looking to do all of the operational heavy lifting on behalf of banks and allow our banking clients to get back into the business of being a bank.
So you've been on the other end of this conversation quite a lot, I would imagine, where I'm assuming the first question that you ask yourself is how, because it's such a complex problem. And I've had a lot of startups come to me who've had great ideas and very similar ideas to this, but get knocked down at pretty much every meeting because of things like security, governance, and just the scale and complexity of the problem that they're trying to solve. And they're trying to do it with, on the sniff of an oily rag, pretty much. How have you been able to give confidence to and get customers on board and investors on board to the significance that you have, with it being such a complex problem and the challenges that are kind of you've had to tackle?
Yeah, there's no doubt that it's a very, very complex problem to solve. I think the advantage that we have is that Di and I...
we should actually mention that, actually. So it's not just yourself, but do you want to tell us about your co-founder?
Yeah, so my co-founder, Dianne Challenor, so both of us have, we're slightly atypical for founders. We're both in our 40s or late 40s in my case. We've spent 20...
same here, right? But I've found that in your 40s, it's all downhill, and going downhill is much easier than going uphill.
Certainly energy levels flag and the like. But I think the advantage that we have is that we've worked in large institutions and we've worked in financial services for a long time. So we understand what it's like to operate inside that regulatory perimeter. And I think that's different from a lot of early stage founders. You graduate from Stanford or MIT, you want to set up a fintech. It's very hard to immediately operate inside that regulatory perimeter because the expectations that are placed on you are so great. And the traditional method of building for an early stage company is to really test and learn.
Yeah. Kind of move fast and break things.
And break things, which is really not appropriate.
Gets you in jail, right? In this space, oftentimes.
It does. And so what you tend to see in fintech is lots of companies that are playing on the edge of the regulatory perimeter. They're playing just outside, providing services that banks can consume, but are really not looking to discharge regulatory obligations on behalf of banks. I think because we had that experience, I think it makes the scale of what we're trying to achieve and the level of difficulty is extreme. But if we can do it, I think you establish a competitive moat around yourself because there are not too many others who are able to tackle the problem that we're looking to solve. So
I wanted to ask you as well that there's some really great Australian fintechs who've taken elements of what you're doing, do it really well. I think Sandstone, Avoga that were bought by Temenos, they've kind of taken certain parts of that journey and done a really good job at execution. What was the thinking behind trying to take all of it, and how do you see an Aussie business? Because I'm assuming that, to take on something of this scale, you got to be thinking global, but everybody's got different kind of regulatory compliance requirements. How are you seeing, kind of taking this and going, 2 or 3 steps further than other Aussie businesses have?
Well, both Di and I have spent most of our careers in global markets. So I spent 17 years in the US, in New York and Silicon Valley, and Di spent, I think, 14 years in Hong Kong and Asia. We came back to Australia in 2017, but both of us have a global mindset. We've worked in large global institutions. We understand how banks work, not just here in Australia, but all around the world. And what we realize is that all banks are fundamentally the same. They all have the same challenges. They run very complex legacy infrastructure, and they also have very complex operations, which are predominantly today manual. It's something that always surprised me is if you look at most banks around the world, this is true for large banks and small banks, they like to think of themselves, and they are to some degree, they are sort of digital first companies with a big focus on technology. But in most banks, they spend somewhere around 10 to 15% of their costs on technology. It's often they spend about 60 to 70% of their costs on people. And those people are doing a whole set of operational activities. That's how a bank runs itself. It operationalizes itself using people. And people do product management, people do payments operations or lending operations or credit assessment, risk management, obviously customer servicing, and all of your compliance obligations are mostly discharged through manual processes with manual controls. So these are managed in Excel spreadsheets where people have to go and review whether the controls have been effective. Mostly those reviews are retrospective reviews that look backwards in time. And what that means, so we've talked about what that means for the cost structure. It's very, very expensive to run those operational services and pay for those people. But when you're using people to discharge a lot of your compliance obligations, it also introduces a lot of human error. And so, the banks have evolved over the last decade or 2 decades into a different regulatory environment than existed historically, but they're still running their bank much the same way that they were a decade or 2 decades ago. And so, it's slightly anomalous that, the banking industry is now subject to such intense regulatory scrutiny, but the tools that are at its disposal are still somewhat old school. I think if you looked at any other industry that has the same level of regulatory scrutiny, you can think of airlines, for example. Any major airline in the world knows where every bolt is in the company. They have incredible software to tell them what's going on inside their company and inside their operations at any point in time in order to manage the risk. But that's not necessarily true in banks today. And so
Excel spreadsheets everywhere.
And so we saw a big opportunity to pull all of that together. Now, your question was, you see today lots of fintechs selling into banks, but they're selling into that, 10% of the cost structure that we'd mentioned before. Really, one of the big problems that exists in banks is how do you automate the 60 to 70% of the cost structure that's managed through people, and how do you thereby give bank executives the confidence that their bank is being run and meeting all compliance obligations at any point in time?
Yeah, I've often said to people when they've come to me and asked, what should we do as an idea? And I've always been of the belief that there's way more opportunity and incentive to develop a service or product that keeps banking execs out of jail than there is to increase customer service or the kind of front end stuff. And I think it's true, right? We've seen what's happened over the last few years where software have cost people jobs, right?
Yeah, I think that's right. I mean, banks have done a really good job on front end customer experience. People like to knock the banks, but you look at the four major banks here in Australia, and their front end customer experience is outstanding. Is as good as, or if not better than anywhere else in the world. Where banks have struggled is, as we said before, around a lot of those operational processes, because it's really hard to automate those given the complexity of their existing technology environments. And so, it's not, if a bank could wave a wand and spend a lot of money to solve a lot of that operational complexity, they would have done that. But it's not as simple as just spending a lot of money. There's incredible complexity in their back end environments. And so that's why we came to the conclusion that we needed to bring all of this together into one native package, one native platform that works together holistically. Because the operational software that we've built that automates a lot of the operational processes that exist inside banks today, a lot of the automated controls that we use in order to make sure that the compliance obligations are discharged, that works natively on our infrastructure. And so, if we were to write code to automate operational processes for banks, the minute that were to be consumed back into a bank's legacy environment is the minute that you lose much of the efficacy of that software. Then you're into this significant effort to customize the software for the particular environment in which it's working. And so you lose much of the value. And so, really our platform has all of that operational software working natively on top of the infrastructure that we provide.
Now, one of the challenges that I've found for particularly people in the banking execs and people coming from corporate into a startup is the vast difference and just the two different environments and the expectations and the skills that are required. So much so that through our research, we've recognized that 90% of people who make that move will fail within the first 6 months and kind of go back into, the kind of corporate world. If I look at the successes that we've had, so Judo, one big success, Athena, who I know you're familiar with as well. It's interesting that, they're both what I would say are kind of front end, product, centric businesses. This is a back end, kind of product and service. What was it that gave you why did you decide to go that route rather than kind of looking at what some of your peers had done and seen their success and kind of emulate that?
If you think of, Athena and Judo are just tremendous Australian success stories, and both those companies have done an amazing job. They're sort of, but fundamentally, what both of those companies do is that they are finance companies. They run balance sheets.
Yeah.
And so there's in order to manage a complex balance sheet, you really need to know what you're doing. And obviously, both those companies are outstanding in that respect. It's a great example of where you really do need significant banking and finance expertise to manage the complexity of a balance sheet. And so I think both Judo and Athena have done a tremendous job of marrying together the sort of the balance sheet expertise together with a team that can really improve front-end customer experience from a technology perspective. I think what we're looking to do is fundamentally different. We're a software company.
Yeah.
So we are not a licensed bank. We don't run a balance sheet. We don't even think of ourselves as a fintech. We're a software company providing services, software services, into banks. Now, that requires really two types of mindsets or skill sets inside the company. Obviously, there's banking expertise, because as we said before, you need to know what it takes to operate inside that regulatory perimeter. But just as importantly, it requires an incredibly talented engineering capability. And so if you look at the team that we've got today, we have about 60 people, but 48 of our 60 are product engineering.
Yeah.
So really our team splits between product engineering and risk, compliance, and legal. It's sort of the two parts of the two parts.
Do you see that changing as the business kind of starts to get more momentum and traction and more customers, to where you then become more of a sales-focused organization?
I think so. Over time, we like to say most good companies eventually figure out product.
Yeah.
But sales, you really need to treat sales also as a science. Your go-to-market motion is very important, and our go-to-market is very complex.
Yeah.
Selling into banks is
it's a long sales cycle and
notoriously difficult. If you think enterprise sales is hard, enterprise sales into banks is doubly hard.
So I wanted to actually ask you about that, because it is really hard. And I do a lot of work with enterprise software businesses that sell into banks, and particularly international businesses who kind of, I think struggle to understand the competitive nature of the environment here. And this belief that, we'll just sell into, kind of the mid-tier market and credit unions, and it's not that easy. How did you go about getting Great Southern on board, and what's the kind of relationship with them? Are they an investor?
Yeah, I think for us, we have the advantage that we've spent 20 to 30 years inside banks. And so we really know what the challenges are that bank executives face. And we've been really thoughtful and deliberate about the solution and the platform that we're building to try to address that need. We were obviously were executives inside banks, and we were astonished that there wasn't a platform or a solution like this anywhere in the world. We would have been consumers and buyers of that.
I'm laughing, right? Because I was actually advising a startup that was looking to sell into banks, and kind of the usual solution of core ledger on a mobile phone. And they were getting a lot of feedback from pretty prominent banking execs who were saying to them, I need you to solve all my problems. If you're not going to solve all my problems, you're just creating more problems for me, because then I've got to integrate this with all the other stuff that we've got, and it's just going to create a lot more mess. And I said, well, that's the feedback, right? Like, what you're asking me for, they've got the problem.
Yeah. I think every bank executive in the world wants to spend their time with customers. They want to spend their time growing the business, and they want to manage the balance sheet and liquidity and risk appetite. That's what excites bankers. Instead, most bank executives spend a vast majority of their time managing infrastructure and back office operations, which they don't really want to do. But that's the nature of the job today. And you're exactly right. The way that and the reason they've got to spend so much time is because of these very complex back office environments. There's a huge amount of integration of third-party services. When people think about bank infrastructure, they often think, there's just a ledger. And the ledger becomes shorthand for the platform that you're running. And so people will talk about Temenos or Thought Machine or Mambu or 10X. Really, the ledger is a very small part of the infrastructure that you need to run a bank. A modern digital bank these days probably has somewhere between 30 and 50 different SaaS services that are all integrated together to provide the platform. And that's just the tech infrastructure. That's not the operational services that you then need to wrap around the infrastructure to actually take your bank to market and operate it in market. And so, as I said, we were astonished that this sort of business didn't exist anywhere in the world. There's a reason it doesn't exist, because it's super hard to build. But our fundamental belief is that if you can build it, if you can actually pull it off, that the market for it is very significant. Obviously, financial services and banking is the world's largest industry.
Yeah. Given what we've been through with the Royal Commission and some of the challenges that came out of that, and then as a response of that, the huge amount of time, money, and investment that's had to go into remediation, do you think that perhaps gave you a bigger insight into what the real problem was versus other regions that haven't perhaps gone through this process?
I think most banks around the world have, whether it be coming out of the financial crisis in 2007 or in Australia's case with the Royal Commission, I think, most banks around the world are under a lot of regulatory scrutiny. And I think you're absolutely right. There's, the expectations have risen and banks have needed to address that. And they've mostly done that through layering additional processes and people. In order to give them that increased confidence. But as I said before, bank executives around the world now need to make regular attestations to the regulator that their businesses are compliant. But if you're an executive inside a large bank or even a mid-sized bank or a small bank, you don't actually have very good visibility into what's going on in your business. And so there's this... You do have these awkward moments where you're making attestations, but you don't have complete confidence yourself in what's actually going on in your business, because, as we said before, your controls are manual controls. They are retrospective. They look backwards in time. If you haven't assessed one of those controls, over the past 6 or 12 months, you've got no idea whether that control was effective or not. And so, really, one part of our platform is giving confidence to bank executives, real-time confidence in how their business is operating from a compliance perspective. That we have a whole set of automated controls. We've embedded over 1,000 compliance obligations and sub-obligations into our platform with a whole set of automated controls around them, so that the products cannot be run in market other than compliantly. If you look in most banks today, the product, whether it be let's say it's a transaction account or a loan or payments capability, those products are run completely separately from the compliance obligation. The compliance obligations are overlaid over the top of the product and typically administered by other parts of the bank. What we're now saying is the product constitutes the compliance. The compliance obligations are inbuilt into the product. You cannot take that product into market and operate it other than compliantly. And so that is a very significant uplift for bank executives.
Why do you think that's not been done in the past?
Because it's really difficult. And so, the environments that banks work in today, with a lot of the complexity on the back end, just doesn't allow for those obligations to be embedded into the product. It requires that you build from a blank sheet of paper. It requires that right from the outset you consider the compliance obligations and the risk settings as part of the product. It's built into the product. Requires a very deliberate mindset right from the outset that you're building compliantly. And so, I think that's that requires it also requires a fundamental shift in how you think about compliance. It's not it's not a second line function.
Yeah.
It's part of your product. And so the way we manage at Constantinople, for instance, is through a whole set of squads, but our compliance and risk people are in the squads. They're not part of a risk and compliance team in Constantinople. They sit inside squads. They sit next to the engineers while code is being written.
Yeah.
We expect our engineers to be across all of the compliance obligations.
Yeah.
One of the most pleasing things over the past 12 months is to come in to work on a Saturday or a Sunday and see the office full of engineers with compliance regs up on their screens as they code. And so you're asking everyone in the company to be across the compliance obligations because that is a constituent part of the product.
I remember having Nick Wilde from Thought Machine on the show a few years ago now, and he said something very similar, which was, we're trying to get our clients to look at, say, a credit card product as a line of code. I guess I'm getting a similar kind of message from you that compliance essentially is a line of code and a set of rules, not a person checking and ticking boxes.
It's 100% right. And in fact, that's the best way to discharge the compliance obligation.
Yeah.
Because it's automated. You've got complete data lineage, complete auditability around what's happened on your platform. So you can show, you can provide assurance both to our client banks and to the regulator that this was the process that was followed. So absolutely, we use software to try to solve all of these problems.
Awesome. Now I want to talk to you a little bit about the journey that you've been on. As I mentioned, you were on 2 years ago. At that time, you were an exec with Westpac. Had quite a bit of exposure to fintech startups, and that you were on the board at 10x as well. But what was it that prompted you to go and take the plunge and start your own business? And how did you kind of get the partnership with Di and you kind of decide together that you would go and launch a business?
So I've always been interested in early stage companies and startups and growth. And so most of my career has been focused on that. When I grew up, I wanted to be the Prime Minister. I was obsessed with politics. My father was a cabinet minister, and so that's really what motivated me. Over time, I sort of drifted away from that a bit, but I've still, if you think about politics, it's you go through these campaigns where you try to convince people to vote for you. You've got a vision for where the country can go. And in some ways, early stage companies are somewhat analogous. You've got an idea of how the world could look or a particular industry might look. You've got that vision in your mind. You try to convince people to come on to share that vision with you. In the first instance, that's investors. Try to get them to share your vision. It then becomes client banks. But the market is in some ways the ultimate form of democracy.
Yeah.
People are voting every day with dollars, whether they like what you're doing or not. And so, in some ways for me, starting a company has that campaign-like feel, which I really find addictive. Even when I was at Westpac, my role there, I was the chief development officer, so I was responsible for a lot of the strategic investment activity, partnerships, fintech partnerships.
But that kind of step though, you being in an environment like a bank, and then you rock up day one and you sat at a desk like this with a laptop in front of you, and that's it. How do you go from that to 32 million seed round, 60 people, customer, all in the space of 18 months since you left Westpac?
Yeah, it's 18 months since we left Westpac. I mean, step by step, slowly. I mean, it sounds...
That's not slow. That's pretty impressive, right? 18 months to have a product in market with a customer doing all of those things in this environment, and also just within the landscape that you're in. And it takes 12 to 18 months just to get a customer with an established product. Never mind starting with an idea. So I think it's really impressive what you've done.
So you're right that, in the early stages, it was Di and me in a WeWork office. We had, we put together a PowerPoint presentation on our laptops, which we then took to SquarePeg and Airtree. That was the start of it.
All right, so you get the money, and then now what? Right, so we've got to make this thing work. Like, how do you get the thing of just making it happen? Because it's
in those early stages, just trying to convince people around where the future of financial services and banking should go. There's a natural logic. To this. I remember Paul Bassett, who invested in us and sits on our board, said to us that, when he was doing diligence on the opportunity, he said he'd spoken to people from banks around the world, and the feedback was there's a certain logic to what we were proposing, and that they thought that in 10 years' time there would be very, very big companies around the world who would do a version of what we were proposing. So the question that they posed to him is, are these the guys you want to back? Yeah. It's a great idea. I think the industry evolves in that direction.
Yeah.
There's a certain inevitability around that, but are these the guys you want to back? So a lot of our effort in the early stages was convincing people that we had the expertise to be able to pull off what is a really complex business model. And that's where some of our background inside banks was very helpful. Once we got the money, and we'd established a relationship with Great Southern Bank, we had to build out a team. We were fortunate that we knew a handful of engineers who had all been friends at Sydney University. They'd all studied mechatronics together at Sydney Uni, and so we were able to bring in an initial group of 15 or 20 engineers who had all been friends at Sydney Uni. And so they'd come from different companies, from Atlassian and Canva and Accenture and others. But they came back together because they wanted to work together. And I think if you took the 48 engineers that we have today, I think 35 of them were all studying mechatronics in the same year at Sydney Uni. And so they're all friends.
Yeah.
And that's made a very big difference for us. And you'd mentioned earlier, Dexter, that when we get most of our people in at work every day. Of our 60, we probably have 50 or more in the office every single day. We have an in-office, an in-person culture, and we think that's incredibly important. But it's been facilitated in part because our engineering team are all friends.
Yeah.
And so there's a sort of a social element to being in the office as much as a work element. They work late.
Didn't that always used to be the case?
I think it did. But we were lucky that we did not have to build that culture ourselves. It was sort of pre-existing and pre-baked. And so we're really fortunate in that sense that very talented engineers, they were attracted to the scale of the ambition of the company's ambition. They want to build a global software company out of Australia, and so that was what motivated them to reassemble together with us. And it's what allows them. They work incredibly hard. We maintain really high standards.
I don't see tennis table anywhere, table tennis anywhere, or bean bags. It's seems like this is people that are bought into the mission, not being kind of coaxed into coming into the office. Yeah, so
we're probably a little bit different on the cultural spectrum than a lot of early stage companies. So we don't. We're here to build a global company. We really want to show. We sort of have that ambition to show the world that you can build big, sophisticated software companies out of Australia. Our view is that that requires an enormous amount of hard work and dedication. Requires that we keep standards very high in the company. We expect excellence from everyone who comes and works here. We're not a place to kick back and relax. That's not the right place for a lot of people. But for those who want that, we think it's a terrific place to work.
Yeah. Now, I want to talk about the seed round again, because it is an Aussie record. Yeah. Despite it having happened some time ago, it was still a very tough period to raise capital in May 2022. I mean, funding fell off a cliff at the beginning of 2022, and so to have people take that level of risk in an idea at a time when everybody's saying stop, is kind of again remarkable. But listening to how you've talked about the size of the problem that you're solving, the size of the opportunity, and then the people that you've been able to bring in, I can't help but think that raising that amount of money and getting the people on board and the backers on board that you have would be absolutely critical to this, making this become a reality.
Yeah, you're exactly right. I mean, you can't build a great company by yourself.
Yeah.
And so it's all about the people that you want to partner with. And that's absolutely true of our investors. So you mentioned at the outset, we raised from SquarePeg, Airtree, and Great Southern Bank. I always say to them, we made 3 great decisions in the earliest weeks of the company, and they've been the best decisions we've made so far. And that was who we decided to partner with on the investor side. And all 3, I mean, just to talk about the 2 venture funds, SquarePeg and Airtree have been absolutely amazing. I just can't speak highly enough of both of those firms. And so Paul Bassett at SquarePeg, I mean, what more can you say about Paul? He's, sometimes you're grateful that you've got Paul's number in your mobile phone, and that, when you see the phone ring and it's Paul Bassett, you sort of think, wow. He's been amazing, but as has the entire SquarePeg team. Similarly at Airtree, our partner there, James Cameron, has been fantastic for us. Craig really backed us. So we're just so lucky to have been backed by those 2 funds. And then our relationship with Great Southern Bank has been incredible as well.
And what kind of feedback have you been getting from them on the product?
I mean, I think, to be honest, pretty similar to the feedback that you gave me. I think they can't believe the speed at which we've built. We've got a really good partnership with them. When you're building a bank, it's not like this, it's not a linear path to perfection. So, we have our good days and our bad days, and we get things wrong. There's no. We talked before about how when you're operating inside the regulatory perimeter, there's no room for error. I think that's true at a macro level, but of course, day to day, there's just impossible to avoid error.
But I think there's a thing between often gets confused, particularly in corporate land, this thing around failure and making mistakes. I think if you make a mistake in this type of environment, you have to fix it pretty quickly, right? And not dwell about it. Whereas I think if you make a mistake in a large corporate, you dwell on it, you think, oh, I'm in trouble, oh, I'm going to lose my bonus. And so that's often where failure comes into it, because you just don't take the action, or you feel kind of encumbered by this fear almost of making a mistake. And I think that's kind of where, I've seen the biggest learning curve for people when they've moved from an environment like a bank to this type of environment is, we talk a lot about vulnerability, and I don't like using that as a term, because there's no such thing as vulnerable leadership. It's just leadership. And everybody here has to be a leader. Everybody has to be accountable. Everybody has to own up to their mistakes. And there's kind of no vulnerability in it. It's kind of.
I think you're exactly right on that. I would say, I think one really important part for us, I do think one thing that we've done well,
apart from raising a record seed round and getting a product out within less than 18 months.
I would say the thing that we do best culturally is that we understand that an early stage company is a learning engine.
Yeah.
And so you cannot bring preconceived ideas about, obviously people talk a lot about the product and needing to get market fit. But even just in terms of how you run the company, how you structure yourself, how you try to solve problems, I don't think we did bring ideas with us about how we should do it, and we got a lot of things wrong in the early stages. I think what we've done well is we're very decisive. We fix problems very, very quickly, and so we'll move off on one tack and we'll quickly realize and we'll call it that that's not working and we'll go in a different direction. That is equally true on the people side. We're pretty decisive. Yep. We bring people in, but we also move people out very quickly. And I think this is something you'd mentioned before about what's the benefit of having, 20 years of experience. I think when I talk to a lot of early stage founders who are in their 20s or 30s, they think that culture is about creating an environment inside the company where people are really happy and they feel supported and positive feedback is provided the entire time. And of course, there's an element of truth to all of that, but equally, you need to be really frank and honest and transparent with people. You need to hold people to account. You need to maintain high standards in the company. And if it's not working, it's in the best interest to have conversations with people and try to find them other roles outside of the company. And so I think a lot of management is very counterintuitive. It's not something that at least in my case, it's, having difficult conversations with people is not something that you are that you're naturally drawn to. Yeah. And yet it's the essence of running a really high performance culture. We've something that I think Di and I were initially skeptical on was when our engineering team joined us, they really pushed very hard for full transparency within the company, and we were attracted to it, but somewhat skeptical about how it might work. But we've gone down that path and it's been tremendously successful for us. Yeah. So there is nothing in our company that is not available to anyone. We publish everyone's pay on Confluence. You can see you can see their base salary, the bonus payment that they receive. You can see their ESOP. All of our compensation, Di's and mine, is available. They can see our cap table. They can see how much of the company they own. They can see any of our legal documents, all of our board papers, all of our financial models, everything. There's not a single thing in the company which is not on Confluence or SharePoint that is available for anyone in the company to see. And that actually creates an environment of trust inside the company. It does often the paradoxical element or the counterintuitive element to it is that it forces you to have really honest conversations with people that are healthy. Yeah. And so someone can come to you and say, oh, I think I'm doing a better job than person B and I should be paid the same as person B. And you're forced to say, no, I don't, that's not how I see it. Yeah. And so these are the reasons why. And so that's a difficult conversation to have, and one that in the moment you often prefer not to have. And it would be tempting just to, I think in past lives, in large organizations, you might just say, oh, you can, you're being compensated fairly. Yeah. And, but I think it really forces you to be, to have honest, frank, transparent conversations, to provide feedback about how people are performing. And actually it creates a much better environment.
As a first-time founder, where have you gone for guidance and advice? And, are there any kind of podcasts or, kind of things that you go to help you on your journey of learning?
Other than Fintech Chatter, obviously.
Well, obviously, right?
No, I mean, for me, podcasts is really important. you sort of what I've found as a founder is that you think you know something, but then when you dig into it, you realize actually you have no idea about it. So I'd say an example for me, I thought I was really good. I thought I probably would be really good at sales. Instinctively, that comes naturally to me, and yet, the more I dive into the science of go-to-market, the more I realize the incredible complexity and sophistication that you need around complex go-to-markets. And in our case, we're really creating an entirely new category of SaaS, and so there's a lot of market education that we're in, because people have not seen a business anything like ours before. Their inclination is always to say, "Oh, so you're just like Temenos or Mambu," and we have to say, "Actually, no, we're completely different. We're unlike anything you've ever seen before. We're much more like a Shopify for banking or an AWS for banking or whatever."
I got a question on that actually. So we were talking pre-show with Di about energy levels, being the age that we are, how it's kind of a bit easier when we were in our 20s and 30s. Having said that, I've found on the journey that I've been on with my business and just the things that I've had to learn and develop and skills to develop and challenges I've had to overcome, and that kind of brutal transparency and feedback that you get having your own business. Actually, I feel younger than I did in my 30s, and I'm in my 40s now, late 40s, but I actually feel younger now than I did. And I think it's that, put it down to that kind of learning, right? And the evolution that you're going through. Have you found a similar thing, or are you just way out of energy and wish you could doing like me plunge pools at 5 a.m. and catching a cold?
No, I completely agree with you. I mean, for me, the average age in our company would be 25 or 26. And so, for Di, and that in itself has been incredibly energizing. Just the level of energy, enthusiasm, curiosity that our engineers have brought to the company has been incredible. And I think we've been really like they are a remarkable group. And so, I think for a lot of us in our 40s, when we think back about developers, we sort of have in mind, people who might, sort of want to spend their whole days in front of computers and sit in dark rooms coding. I think what has been revelatory for us is seeing the extraordinary talent in a young generation of engineers. And they're not, I often describe it that if you think of a lawyer will have legal expertise, but the way that they execute their expertise is through writing. Yeah. I think what I've really seen with the engineers is their expertise can be very broad. The coding is just the way they execute the expertise. It's not just this mechanic. Yeah. And so I've mentioned before that I'll come in on the weekend and our engineers will have APRA regulations or AUSTRAC regulations up on their screens while they're coding. They are deep in the detail.
It's that ability to be able to synthesize information and then create something, digest it and create something.
Exactly.
With it.
And so, this sort of, for a lot of us, this idea that you have business analysts who write up a set of requirements and then hand them over to a developer to just code, that's just not needed. Yeah. Because
it's kind of actually the problem that you're solving in banks. That's another problem that needs to be solved, right? Just another person in the mix to create some confusion, error, or an unintended output.
It's exactly right. But then to go back to your earlier question, one of the downsides of being in your 40s is flagging energy levels, and Di and I have young families. So Di has 5 kids, unbelievably, and I have 3. And so that's a challenge. Because an early stage company can be all consuming. It takes a lot of time. There's a lot of things that are are not really visible. It just is a huge amount of effort to create and stand something up which is invisible from the outside. It's when you do podcasts like this and you sort of recount some of the high level, things that we've done well, it really disguises the day-to-day effort, where you get some things right, but you get a lot of things wrong, and it's a real grind to move the ship in the direction that you want it to move. And so balancing, the need to be a parent and to be around them and spending really quality time with them and helping them develop, together with the obligations you feel while leading a company, is difficult. And we haven't by any means solved that problem. And if you did podcasts with my wife or with Di's husband, they have a very different view about.
Maybe that's an idea for another show then.
So because it does come at a real cost, it does come at a real cost, and so you're sort of often prioritizing things that you wouldn't necessarily want to do, but with that. These are all trade-offs. And if you're founding a company in your 20s, you have a lot of energy, you have a lot of time, and those can often compensate for the fact that you haven't done a lot of management before. In our case, we don't have as much time, perhaps, but we're able to draw down on sort of 20 years of experience.
Well, oftentimes not having the experience, creates a lot more work, and it takes away a lot of energy, because of the mistakes that you make and the errors that you make. Whereas when you've got experience, you see the red flags.
I think that's partly true, but I think we place too much value sometimes on experience, particularly industry experience.
Mm-hmm.
One of the things that I really like about the shape of our team and the culture in the team is that none of our engineers have worked in banking before. And they bring a completely different mindset to it. They really approach everything from first principles. And so, they go deep into the detail, and why can't we solve this problem this way? Or, I think we can introduce an automated control around some process another way. I think having that freshness, bringing a fresh set of eyes, without bringing any of the baggage of how things have been solved or addressed historically, is very important. And we've really valued that inside the company. It's just finding that right balance. And so we've got I think a really nice balance at the moment where everything gets driven from inside the squads, but we've got sort of 10 people in the company who've got significant banking experience who can insert themselves. They can dive into the squads and say, I don't think that's how you should be solving this. Have you thought about doing it this way? You're going to have a problem. This may work now, but you're going to have a problem in 12 months' time if you move down that path. And so, we get the dynamism coming from the bottom up in the company, really wanting to solve problems freshly anew, but then we have some experience,
pragmatism,
and just sort of saying, that's an interesting way of solving it, but have you thought about these 5 issues that you may run into in the future?
So, Mark, it's been a massive week for you. I just want to thank you for taking the time to talk about this journey. I think it's a really great story, great example, and a fairly unique example of how to go about launching a fintech here in Australia. Really excited to see your progress. But before we wrap up, any more exciting news that we can expect from Constantinople in the next 12 months?
We just hope to continue executing at the speed that we've done to date. So as I'd mentioned at the outset, we're now live in production. We're soon to commence a pilot with Great Southern, and we hope to support Great Southern with the launch of their business bank in market later in the year.
Fantastic.
That'll be a really important milestone for us. We've got conversations with a number of other banks in Australia, which is really promising. We see no reason why in 5 or 10 years' time we can't have 500 banks on a single multi-tenanted, multi-ADI platform around the world. So, we've got a huge ambition. As I said, we want to build a global software company out of Sydney. We've made a good start, but we've got a lot of hard work ahead of us.
Now, as you well know, we get some amazing talent listening to this show who, if there's one thing that I think they've all got in common, they want to be working on projects with businesses that are doing something significant where they can create some form of legacy in their career. If there's anybody that's listening out there that's been enthused by this conversation, what would be the best way for them to find out about careers at Constantinople?
We'd encourage them to get in touch with us. We have a landing page online that people can find by Googling Constantinople, and we have there's a Join Us tab where they could fill out a form and we can get back in touch with people. I'd say that we've tended to hire historically from within our networks, but that's not to say that we wouldn't. We're always looking for really high talent. We run a pretty rigorous process around hiring. We have quite a few tests that we put people through, together with interviews. And then the only other thing I'd say, not to discourage people from contacting us, but it's a pretty unique culture that we run inside the company. It's a really high performance.
As I said, we've got amazing talent, right? And I think a lot of the things that you'd be talking about will resonate.
Yeah, exactly. And so what I want, you'd said before, Dexter, no ping pong tables or beanbags in the office. Someone actually got off on a floor below us in this building and then came up. And when they came out and they just saw, sort of 70 desks with monitors, the response was, "Oh my God, this is so hardcore. This is so hardcore up here." With all of those caveats, which are important for us, for the people that you've just spoken about, the type of person who's super ambitious, who wants to work hard on a really big global problem, who shares the ambition of wanting to create big companies that are based in Australia, we are incredibly eager to hear from them.
Yeah, awesome. Thanks for joining me, Mac. And as always, you can connect with me on LinkedIn and Twitter. If you're tuning in for the first time, thanks so much. Make sure to give us a follow and a like, and you can leave us a review on Spotify or Apple Podcasts. If you're coming back to the show, thanks so much for your support. It really does mean a lot to me. And until the next episode, keep well. Fintech Chatter is presented by Tier 1 People, leaders in fintech executive search. We'll help you find world-class fintech leadership talent to build world-class fintech ventures. And you can find out more at tier1people.com.